Okay, welcome back to episode 7. So I'm just going to continue on from our 4 hour chart and work down to my lowest time frame, which is the 1 hour. So I'm just going to connect or show you how the 4 hour can connect to 1 hour entry points. So we're just going to map out this trade, yeah? So it's a trade that I took recently, as you may have seen on my social media. So it's Aussie dollar. So what we can see here is we've got our 4 hour high. So that's going to end up being our target, so to speak, as price tends to rally back up to the origin. In terms of structure, we can see we had a bit of consolidation here. We had that, like I showed you before, when we make a high, price fails to move through it, and then we see that drop down once we break that significant low. On this side, then we see the drop down. But what we're focusing on here is our overall structure and entries. So again, let's just keep this as our key level there. So when we look at Aussie dollar, we notice how structure can play a significant role. So more importantly, we can see on Aussie dollar what I like to call, we've got this descending pattern in a down trend. So Aussie dollar is particularly likes, this is a reversal pattern for Aussie dollar. So when you see a down, so let me illustrate it. If you have a downward trend and then you see a downward pattern, it tends to lead to a reversal. If you see a downward trend which then has a upward pattern, that tends to lead to a continuation, and vice versa. If you have an upward trend and you see an upward pattern, it tends to lead to a reversal, and if you have an upwards trend that has a healthy pullback, that tends to lead to a continuation. So that's what we're seeing here. So on this example, we're seeing this one here on Aussie dollar. We're seeing a downtrend approaching a key level of 67500, and it's a down trend with a down pattern. So we're looking at reversal. So again, we zoom in to Aussie dollar and have a look at how we're going to enter this trade, or how we would enter this trade. So our area of interest is going to be this previous support turn resistance. So why this is a key level here is because if price gets above this level, we should now be looking for longs. That's what we should be looking for, longs. So let's see what we can see. Price breaks above, and you can see immediately it's a strong 4 hour close above. Right now we still have no entry point. All we have is the beginning of our pattern. So we have the beginning of our pattern coming into play, which is we've got our A. We're now looking for our B leg, wherever that may be. Let's see. So we found our B leg here. Price then drops, does the same thing that I'm saying. We make an initial high. It can't break through that high, which is the lower high. And now we're looking at price to pull back. So with Aussie dollar, we're now looking at a pullback on this pair. So we look what's price doing. We start to get a period of consolidation. So let's just take the fib out. We get a little bit of consolidation in and around here, and we start to create a little pattern. So you see we've got the high holding, we create this corrective structure. So what we're looking for now is for price ideally to come back down and retest one of these regions. So when we look at Aussie dollar here, the area of interest that I'd be looking at for potential retest for me to go long would be in and around this region here. So from the top of this wick down to this candle close, that's where ideally I would be looking for long entries. That's where I'd want to see how to get into this market. We didn't quite get an entry. So we didn't get an entry. When we look at our setup here, we got a 50% rejection. So you can see my area where I wanted to go long from would be 60 to 70.2. So I'm not going to obviously do a hindsight bias and just say, okay, yeah, I would have been I would have been short, or I would have been long from there. So then we see again now, we've got that structure, we've got that bullish structure. So let's continue here. So we've got that low, that high, that higher low, and we're coming up into that higher high. So what are we looking at now for Aussie dollar? I'm now looking at longs, which is obviously, you see a trade that I took. I'm now looking for longs when we can see some sort of pullback near this trend line. So that's the area where I'm looking for my longs. So when we align our 4-hour fib, we're now in that region I'm looking at that 71, 74, and just like the same thing again previously, we look at Aussie. Price shouldn't have got through this level here if we was going to continue bearish. And then we look at what's the region where we're looking for retracements. For me, it would be in here. So when we zoom into our 1-hour chart now, so we zoom into our 1-hour chart, we're just going to go back a little bit. We're zooming into our 1-hour chart, sticking here. So now we're looking for entry points around here. A nice area of resistance is here. And like I said, we're looking for longs in and around this area. So this is a high probability area for multiple reasons. We've got our A, B, C, which is our reversal zone where we're looking, and 68371 looks like an ideal entry. So we go down into our 1-hour chart now, and we're looking how to enter this market. So we can see price comes right down into this area here. Let me slow down the replay a little bit more just to see what kind of price action we get. So what we can see here is we're now creating a short-term 1-hour high. So we've kind of got that low and we've got the high. So you might as well say we're inside this range right now. So what I'd want to see is price break above and retest this range. So we can either go long now, and then your stop loss for me. So there's different ways to approach the market when you're zooming in, all based on your different types of risk and reward and risk appetite. So if you want to go long now, either your stop loss can be below here or below here, and overall invalidation of the setup is below here. But the reason why we can have a tighter stop loss is because we've got these higher lows. So we shouldn't see price get down here, so we can take that one off straight away. With here, is it possible to see a potential false breakout and then go long? Yes, it is. So for me, the maximum I'd put my stop loss, if we're going to enter now, the maximum I'd put my stop loss is, so let's predefine our target. So that's one thing I always want to do, predefine our target, which would be back up to these highs first. That would be our first target, and our secondary primary target would be at 0.7. So we're looking at a 5.6 risk to reward. How can we further increase the confidence of this trade? We've got this high down here. So again, look at what we've got. Exactly the same structure that I just mentioned at the beginning of this. When you've got an uptrend now and we're doing a healthy bearish pullback, that leads to what we should see is price breakthrough, look for that retracement, and then we should be going long up into our first area here where we see a bit of consolidation, and then we should break above and end up coming to here where we see a bit of further consolidation, potentially a pullback, before we have that last ditch rally up to 0.7. So this is a trade that I've been in publicly around December and has been showing everyone. So let's just see how we go. So we get a good entry back into that area. You can see stop loss still wouldn't have been hit. We now pull back up. We're still playing. So at this point here, we're still playing around with this resistance, but we get that break. We get a break, we get that pullback right there. So exactly the price action that I've showed you. So we get that break, we get that pullback. So now we zoom in. So this is our edge in full effect. So we use our fib tool again as we zoom in. So on our breakout into here, we're now looking at our entry point, which would be, for me, our entry point ideally would have been here. Stop loss now, perfect here, 15 pips. So that's the ideal entry once you've actually seen your edge. And we know our target 0.7. So that is offering you now a nearly 9-to-1. So that is a perfect trade setup. So now let's have a look at the way price action unfolds. So that's our 9-to-1. So we see price starts to come up to those highs, has a brief pullback, and then we break through. So even for price forecast, let me pause it again. Like I say, price moves the same, just happens in a different way. So we can take this price action. So you see this time we had a bigger breakthrough, a deeper pullback, but you can see where our target is saying to us to go. So we'll have price here like just a guideline of what I'm expecting. And then what can we see? Price continues, gradually moves higher, comes to that area where we see that sell-off that I've mimicked. We start to push higher again. And throughout this now, guys, let's just pause it here. Throughout this price action is leaving you clues. So when you come down to the 1 hour, like I said, if we're going to continue to push higher, we shouldn't see price close below this region. Now we're above this region, we shouldn't see price close below this region. So later on in the episodes, I will explain to you how you can safely move your stop losses. But let's just continue to watch how price unfolds. So we see still a bit of ranging, and then we break above. And then you see price continues to move in a bullish direction. And remember, this is our price forecast. So this is where we think price is going to do what it did before. We get up to that area 0.69, and what do we see? That is price fulfilled. So that is at 8 or 9-to-1. So we're entering here. Once we see our structure, our stop loss is just there below that low, and now we're looking for our target, which has been achieved. So that's a 9.2-to-1. So even if you catch one of those or two of these trades a month, you can see how profitable it can be. And you can also see how you can zoom in and really get a tight stop loss. So obviously the higher the time frame that you're in, the bigger the stop loss you will have to be, because there's different levels of invalidation depending on what time frame you're looking at and depending on what setup it is. But with Aussie dollar, you saw on numerous occasions the level of invalidation was changing. So when we got to here and we've broken and stayed above that level, for me, we shouldn't see price come back below this level here. We then had another rally up. Only time I really saw the characteristics of a pullback, if you look at the highs, so that's how I really gauge it. We shouldn't see price break through more than 2 steps. So when you're going to move your stop loss up, so it's just a brief, me just briefly going through how you can move your stops safely. So you should only move your stops as and when you can. So you see your stops originally here. So your stops originally here. You always leave it one behind. So your stop's going to be here until we have a prolonged pullback. Then we'll put our stops here. We've rallied back up. We pull back down to here. So then now your level of invalidation should be here. You move your stops to there. Price goes again, pulls back. Now your stop can come to here. Rallies up. Shouldn't go lower than here. Now you can move your stop up higher again. Consolidation. Pulls back a little bit. Stop can be here. And as we look after that, all we saw price do was rally. So we could be in for a pullback soon, or we could be in for a potential reversal on Aussie in a short term, just a pullback. Because looking at current characteristics of price right now, Price is getting a bit thin, and like I said to you before, now we look like we're having an upwards pattern in an uptrend. So what that will lead to is price potentially reversing down, because you can see now we've got a huge gap in price. We haven't really had any real pullback. So if we break this low, we may see Aussie dollar reverse back down to the previous support resistance. So you wouldn't want to give away that much of your trade. So me, realistically, I'd possibly put my stop loss now up into this area here at 69625. So that's a lot of the trade banked in. And then when you look at your daily and you move back up, you can see we're at a key level 0.7. Even you go into the weekly, you can see it's a very strong level as well. And overall, our structure is still bearish. So you understand where you are in the market, and your level of invalidation now for this bullish setup would be here. So you wouldn't want to see price get below this area. So like I said, just to be safe, always leave it one behind. So that's where I'd move my stop loss now. And if Aussie dollar breaks below this area here, then I'll be looking for that retest, and then I'll get stopped in break even and wait to see where markets pull back from. But you have to remember, we went long from here. So we've now banked in nearly 120 pips. We've now banked in nearly 121 pips on Aussie dollar with no risk in the market now. So if this market continues to push up, you'll continue to make a profit. But if structure changes, then you'll bank 121 pips. So Aussie dollar is just a good example, especially on this hour, of how to zoom in to find a great entry when we're looking at our C leg entry points. So I hope you enjoyed this episode, and stay tuned for the next one.